All right, welcome to Module 4, where we're going to start learning about technical analysis. We're going to start off by taking a look at the three most popular types of Forex charts. These are the line chart, bar chart, and candlestick chart. Now we're going to talk about each of the Forex charts and let you know what you should know about each of them. So a line chart is very simple. All it is a line that's drawn from one closing price to the next closing price. When strung together with this line, we can see the general price movement of a currency pair over a period of time. A bar chart is a little more specific and shows the opening and closing prices as well as the highs and lows. The bottom of the vertical bar indicates the lowest trade price for that time period, while the top of the bar indicates the highest price paid. So depending on what time frame you're trading in, these bars are going to signify a certain amount of time, whether it's 1 minute, 5 minutes, 15 minutes, 30 minutes, even up to a whole week. So a bar will form and the price is going to move up and down within that bar. And then after a certain amount of time, depending on that time frame that you're trading in, then the next bar is going to open up. Here in the MT4 platform, you can see up here where you can choose between 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, 1 day, 1 week, and even a month actually. So if I choose 1 hour, for instance, then each of these bars that you can see here represent 1 hour. So after an hour goes by, a new bar will form. After another hour goes by, a new bar will form, etc. So the vertical bar itself indicates the currency pair's trading range as a whole during that time period. The horizontal slash on the left side of the bar is the opening price, and the right side horizontal hash is the closing price. So this is just an example of a chart for the Euro USD. You can see here that we have a bunch of different bars, right, that are going down and back up and back down and starting to go back up. So like I said, depending on the time frame, each of these bars indicates a certain amount of time. So if we're trading on the hour time frame, then each of these bars represents an hour. To the right, we can see an example of a price bar. The little horizontal line on the left is the opening price. The top of the vertical line defines the highest point of the time period, and the bottom of the vertical line defines the lowest price of the time period. Then where it actually ended up closing out is the little horizontal line on the right. Finally, we have the candlestick chart, and this is the most common. Candlestick charts show the same price information as a bar chart, but in a prettier, more graphic format. This is what I personally prefer, and this is what I'm going to be teaching throughout the rest of this lesson. Candlestick bars still indicate the high to low range with a vertical line. However, in candlestick charting, the larger block, or the body, in the middle indicates the range between the opening and closing prices. You can see in this example as well that the color of the body makes a difference. If the body's red, it means that the price opened up higher and then closed lower. So you can see the red candles are always moving down. And then in this example, you can see the green candles are always moving up, which means it opened at the bottom of the candle and closed at the top of the body. For example, you can see right here that this is where it would have opened at the top of this body, and then it closed at the bottom of this body. However, price did continue to come down to here, but then came back up and actually closed out right here. So the wicks actually show us where price got to at one point, but doesn't show where the price ended up closing. Then you can see the next candle is also red, which in this case means that it's also starting here, going down here, it closed here, price also reached to the end of this wick, came back up here, and then this one formed, price started here, since it's green in this case, moved up to this point, closed out here. Next candle, green, also moved up, so started here, moved all the way up to the top of this wick, but then came back down and ended up closing right here. Then the next one starts here, it opened, moved down because it's red, closed right here. The purpose of candlestick charting is that it's visually easier to study and observe. Patterns are easier to see, and it's easier to identify turning points in the market, which we're going to talk about in an upcoming section. Now, last thing I want to mention before moving on to the next section is these colors, the green and the red, are not always going to be the same colors as the ones that you see in your MT4 platform. They may be green and black, they could be purple and blue, they could be any colors really, but one color is going to signify that the candle is moving up, and the other is going to signify that it's moving down. And this is going to help you visually see, as the market's moving, which way it's moving, if it's going up or if it's coming down, based on the color of the candlesticks. All right, so like I said, you're definitely going to get used to this. It's not hard at all to just stare at the chart and know which way it's moving and see these candles and know when it opened and when it closed. But we're going to go ahead and move on to the next section and start talking a little more in detail about more technical analysis and identifying patterns in the market.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.